Hello everyone, I'm Andy, managing partner for the Agave Lab Venture Fund. By now, you've realized that this presentation is going to be in English, so a good opportunity to practice. Does everybody speak a little English, maybe? Okay, good. I'm going to be controlling the presentation with my iPhone here, I hope. So my hope, what I'd like to do is to give a kind of a background of what's happening in the investment community in Mexico, both like generally and what's happening in the banking sector with regard to investment banking. So I'm calling this thing detrás la euforia, or like behind the hype. So how many people have heard this? Something is the Silicon Valley of Mexico. Nacualpan is the Silicon Valley of Mexico. Guadalajara is the Silicon Valley of Mexico. Every place is the Silicon Valley of Mexico. Why do we want that? It's pretty obvious. If you look at some of the companies that are created in the Silicon Valley, we look at the values that they're creating. We have Airbnb at a $25 billion valuation. We compare to those companies in Mexico, for example, let's look at Bimbo or Cemex, a $10 billion valuation. Why do we want a Silicon Valley style economy here? Obviously these companies are able to grow quickly. The margins are enormous. Look at Uber with a $50 billion valuation, a company that didn't even exist 5 years ago. So these are the kinds of companies that we want to attract to Mexico. They offer jobs, middle to high-end jobs, clean. They don't pollute. So it's attractive. It's obvious why it's attractive. But let's talk about what's actually going on. I know we all hear a lot about. There's a lot of investments. Venture capital is everywhere. Startups they take off in Mexico. But let's look at the actual numbers. We see here in the United States. This is in 2014, the last year I could find reliable information for. $47 billion invested in startups and 3,617 transactions. If you compare that to what's happened in Mexico here, we have $1.3 billion of investment and only 54 transactions. Huge difference. So to put that in context, if you look at all of Latin America, this is all of Latin America, Mexico all the way down to Tierra del Fuego. It's 51 times smaller than the United States. If you also look at the way that money has been invested, that 1.3 billion invested in Mexico, only 38 million of that was invested in a startup. So let's put that in context. So Mexico, with a population of 122 million people, the 15th largest economy in the world, invested the same amount in startups than the state of Nebraska. A state with less than 2 million people, one of the less populated states in the United States. So it's clear from this that venture investing in startups are at their infancy in Mexico. Let's look at how and why that is the case. So why do we not have a Uber of Mexico or a WhatsApp of Mexico? Mexico obviously is not the United States. There are some factors, or social, historical, political factors that make Mexico less willing to take these types of risks. Just go through some of them, and I'm interested to see what your thoughts are on these. We tend in Mexico to invest in our friends and family. It's much harder for us to invest in strangers. We tend to invest in people we know, in our family, and our social group, whether they be close family or extended. We give a lot of attention to titles, university titles, patents, awards, things like that. I'll just give you an example. Let's look at Mark Zuckerberg and Steve Jobs. Let's look at Bill Gates. Do you know what they all have in common? They didn't graduate from college, and they didn't have a job before this. So in Mexico, those guys would all be working at the OXXO. We don't tolerate failure. And the reason we don't tolerate failure is because we're surrounded by our friends and family, and no one wants to fail in front of your friends and family. But in the United States, to fail is considered part of success. So Mark Zuckerberg says, move fast and break things. Failure is considered just one step closer to success. Where in Mexico, failure is failure. And also we prefer to succeed in private. When we do have a success, we tend not to tell too many people about it. If you had a successful exit, you sold your company maybe, you made some money, you certainly don't want people to know about that. Where in the United States, you have a t-shirt that says, I made $10 million. People are very proud about the wealth that they've created. In Mexico, there's security, there's social issues that make that really not happen. And finally, we have to realize that we look at the Silicon Valley and we think that it just happened yesterday. Netscape happened over 25 years ago. A lot of you guys were just toddlers, just little kids. So it's happening in Mexico, and it will happen in Mexico, but we have to realize the United States has more than a 25-year head start on us. And what that leads us is if you don't have a lot of successful financial exits or sales to look at, you don't have a lot of people who have been in startups multiple times, you don't really have a role model or a model on which to base your investing decisions. So this tells us a little bit about why we're seeing a kind of a slow uptake of venture investing. But let's talk about the banking world. So the banking is a strange world in Mexico for a couple reasons. It's had a double advantage. One of them is that Mexico has had this huge component of its population that have never banked compared to the United States. And now they're banking. So we have a lot of people entering the banking sector. And Mexico's banking sector has been relatively closed to outside forces. There haven't been a lot of international competitors here. So what that gave us is some pretty unsatisfied users, while paradoxically at the same time, record profits. So why is that? That's kind of strange, isn't it? Well, the reason it's strange is because banks have really not adopted innovation or aggressively adopted a user-centric view of the world because they haven't have to. If customer profits are growing and the amount of customers I'm driving and bottom line revenues are growing, there's no real reason for me to innovate. If it's not broke, don't fix it. But this generates a situation in the banking industry that I think is extremely precarious. And let's talk a little bit about why. This may be the situation inside Mexico, but the rest of the world is not standing still. There's been just a veritable tsunami of fintech investing. Do we all know what fintech investing is? These are young startups that are targeting financial services and banking. $14 billion of investment has been made into this sector in the last 3 years, and that's a 400% increase from the previous 4 years. $14 billion. It's enormous, the amount of money that's going into that space. And it's primarily focused on one part of fintech, and that is the consumer relations. What fintech companies, startups are looking for is they want to attack and approach the consumer relationships that the banks have now and dominate that. So what's coming? So all of you people who are in the banking industry, here's what you can expect to see over the next 2 to 5 years. Revolutions in the way we do payments, loans, mortgages, transfers, anything that has to do with consumer banking. And how is it changing? This is a partial list. This list goes on for pages and pages. But things like the mobile revolution, biometrics, demographic changes. Most of these fintechs, if you're over 26 or 27 years old, they don't care about you. They're targeting people between the ages of 18 and 25 because they know these are people who don't go to branch banks. They don't go to a physical bank. Everything they do, their entire life is lived right here. So those are the people that they're targeting, not people that are old like me. I just wanted to mention the blockchain. The blockchain has a tremendous impact because right now the central point for all of these transfers where the transactions happen are through the banks. With a blockchain, you don't need that. The blockchain, I can clear transactions completely outside of the bank. So these are some very fundamental, any one of these is a huge disruption waiting to happen. But all of them seem to be happening at the same time. There's a study that came out by McKinsey. It was done, I guess it came out just this January. And they estimated between 20 and 60% of the profits of banks will be at risk. 60%. of the profits. It's amazing. We've never seen anything like this before. In Mexico, the problem could be much, much worse. And here's why. The level by which we have a base of consumers that are unsatisfied and don't like going to their bank, don't have a good personal relationship, don't have positive sentiments about their bank, and the amount of profit that's in that industry makes it a very attractive target, which means that the speed and the violence by which that disruption is going to happen is going to be accelerated. So I hear this all the time. This is not the first time I've said this. So I hear from people in the banking community, oh, it's not going to happen here. We have regulations that are strict. We kind of control the banking industry here. It could never happen here. We don't have to worry about that. Let's talk about a parallel. We heard this a lot in the taxi industry when Uber first showed up. We don't have to worry about them. This is just a toy for kids. That's not something we need to worry about. We're the taxi industry. We own this country. But now look what's happened. There's over 50,000 Uber drivers in Mexico City, over 500,000 users in Mexico City alone. And right behind that, you got Uber Logistics, Uber Delivery, Uber Travel. This is one of those situations where we all remember, like, no one in this room liked to take a taxi in Mexico City. It's something we had to do. And then there was this fantastic thing called Uber, which, wow, the cars are clean. I don't have to worry about being kidnapped. The guy's probably not going to rip me off. Great. So another thing that happened, and this is another parallel with Uber, is it's something really hard to stop, this sort of innovation, especially with the advent of populist politics in Mexico. We have new candidates that are appealing more towards voters and less toward more traditional party lines. You don't want to be the mayor of Guadalajara who outlaws Uber. Uber is one of those things that all of the people who vote for you love. So who wants to be the guy that says, oh, we're going to get rid of Uber? You're never going to win an election that way. So that's another thing that's happening with this disruption. There may initially be, of course, all sorts of attempts to prevent this sort of disruption. Do I win? Congratulations, whoever that is. So what does this mean for this sector? Dramatic disruption. Be prepared for chaos. I don't know if it's going to happen tomorrow. I don't know if it's going to happen in a year, but it's going to happen within the next 5 years, 10 years. Some banks are just going to disappear. Some banks are just not going to get it. They're going to say, this isn't going to happen. I don't need to worry about it. So those guys are just gone. Other banks are going to fight for the consumer relationship. They're not going to figure out how to do it very well. They're going to lose. Those banks might end up being kind of a service bureau where they're just going to give up the consumer relationship. Instead, what they'll do is they'll handle just managing the transaction in the background while a group of mobile applications, young fintechs, actually manage the customer relationships. But some of them are going to thrive. Some of them are going to do really well. And here's how they're going to do it. And here's the part I wanted to get to with regard to, like, what are the practical things that a bank can do to thrive in this new environment? Let's start with technology. It's impossible to predict what's going to be successful when it comes to new technology. Lots of it doesn't work. You need to be prepared from a technology perspective to have a flexible technology backbone based on open standards and APIs where you can plug in new technology, and if it doesn't work, unplug it. So you need to have an open environment that's open to third-party applications that you can try out to see which ones work. Some companies will start out with technologies, they'll be quite successful, and then they'll go offline. As a bank, you need to be able to, like, plug those people in and plug them out. Security, I hear this a lot. I don't want to innovate because I'm worried about the security of my clients. So Mexico has the highest level of fraud in the world. So whatever we're doing, it's not working. So what's happening right now is you've got, maybe 20,000 kids between the ages of 14 and 22 working around the clock to try to rip you off. Most of them live in the Ukraine, apparently. So you may not think that, you may think that you can just turn your back on technology
and not worry about it, well, they haven't turned their back on technologies. There are people who are actively working right now how to subvert your current systems. So you're going to have to embrace technology and learn how it works and try to find ways to use technology to increase your level of protection of your clients. And attitude. I know this is hard for banks, both in Mexico and worldwide, and just an attitude of experimentation. Try things. Interesting thing I heard today about Uber. Do you know Uber was kicked out of Portland, Oregon? They kicked them out. So you know what they did? They spent 2 months while they were outlawed delivering ice cream. They just ran around. You could pick up the Uber application and push a button, and ice cream would come to your house. I mean, what a weird experiment, but it worked. Because at the end of the 2 months, what do all the citizens want? Do they want to go back to those shitty taxis, or do they want to go with the ice cream guys? So my point is that try to do things, try new things, try experimenting with different ways of dealing with your customers. Think and talk to your customers. I mean, imagine that you're them. What would you like to see? Don't think like a bank, think like a customer. Another thing that I wanted to point out was be open to third parties, be open to other companies, innovation within Mexico and outside of Mexico. It's going to be very difficult for banks to reverse a culture of 40 years of non-innovation to suddenly become an innovative startup. It's very difficult to do. And if you did want to do that, the best way to do it would be to find startups and either acquire them and bring them in or partner with them and learn how they work. So that would be my advice, would be the primary or the best outcome for you would be for a bank to become sort of a hub, and all of the startups, these new young startups, tying into that backbone or tying into that hub of the bank. So that's my recommendation. So now my recommendation for startups, so that's my advice for banks. My advice for startups is focus on the consumer. Don't focus on the banks, focus on what the consumers are looking for, because that's your greatest opportunity. Try to find problems that are real. You all deal with your bank, you know what problems you have, you know what you'd like to see less of, what the actual issues you're dealing with on an everyday basis. And finally, try to find problems that you can solve incrementally. If the first thing you need to do with your startup is create a fiber backbone network with credit card processing that spans the globe, that's probably not going to work, because keep in mind, you probably aren't going to be able to work out and raise $1 trillion. What can you do with $100,000 or $200,000? What small problem can you solve that then you can grow into a larger and larger solution? So that's all I got for you. I want to thank you very much. If there's questions, I'm free to, I'll take those. And if you need to get a hold of me, that's all my contact information right there. Thank you very much.